Imagine waking up one morning and discovering that the world you knew, your job, your savings, your future, had evaporated overnight. Not because of a natural disaster, not because of a war, but because the entire financial system simply collapsed. Now imagine this wasn't just you. It was your entire neighborhood, your whole city, your entire country. This was America in 1929. Over the span of a few months, more than 6,000 banks failed. Fortunes disappeared. Families who once had comfortable lives found themselves in breadlines. Children scoured garbage cans for food. And the American dream, which once felt unstoppable, suddenly looked fragile. But here's the real question. How did the world's richest, strongest, fastest-growing nation fall into the worst economic disaster in its history? And how did this disaster permanently reshape American life, our government, our money, our jobs, and even the way we think about success and risk? Today, on Channel YouTube, we're diving into the untold story behind the Great Depression, how it happened, why it happened, and how it rewired America forever. This isn't just history. This is the story of how our modern world was built out of economic chaos. Let's begin.
To understand the Great Depression, we have to step into the Roaring Twenties, a time when America felt unstoppable. Jazz clubs were alive, skyscrapers were rising. New technologies like radios, telephones, refrigerators, and automobiles transformed daily life. The economy was booming, wages were rising, and millions of Americans were entering the stock market for the first time. And here's the dangerous part. Everyone believed the good times would last forever. Newspapers encouraged people to buy stocks. Banks encouraged customers to borrow money to invest. People mortgaged homes, sold farmland, and took loans just to get a piece of the action. Stocks didn't just rise, they skyrocketed. Between 1921 and 1929, the Dow Jones quadrupled. It felt like magic. But beneath the surface, cracks were forming, cracks that would soon split the country in two.
By 1928, the stock market was no longer just a place to invest. It became a national obsession. People were buying on margin, meaning they only needed to put down 10% of the money to buy a stock. The rest? Borrowed. Imagine buying a $1,000 stock with only $100 of your own money. If the stock goes up, you make massive profits. But if it drops, even a little, you're destroyed. Margin debt exploded. Risky companies with no profits issued stocks. Insider trading was rampant. Banks used customer deposits to speculate. Wall Street was a casino, and everyone was betting. Meanwhile, industrial production, the real backbone of the economy, had already stopped growing. Wages were flattening, farmers were drowning in debt. Income inequality had soared to levels similar to modern America. But the stock market hid all of this. It became a glittering illusion. If the 1920s were a party, the stock market was the music. And in October 1929, the music stopped. You might think the stock market crash itself caused the Great Depression, but the crash was just the beginning of the avalanche. The real disaster came from the banking system. Back then, federal deposit insurance didn't exist. If a bank failed, your money was gone. So when people feared banks were unstable, they rushed to withdraw their savings. A run on a single bank would often spread to nearby banks. Panic feeds panic. Between 1929 and 1933, over 6,000 banks collapsed. This meant savings wiped out, credit vanished, businesses couldn't get loans, companies began laying off workers, consumers stopped spending, factories stopped producing. It was a vicious cycle. And by 1932, unemployment hit 24%. In some states, it reached 40%. Imagine 4 out of every 8 people you know suddenly jobless. It wasn't just a recession, it was a national breakdown. Families lost homes. People lived in shacks called Hoovervilles, named after President Herbert Hoover. Bread lines stretched for blocks. Children stopped going to school so they could scavenge for food. America was unrecognizable.
As if economic collapse wasn't enough, nature delivered a second blow. Throughout the early 1930s, severe drought hit the Great Plains. Decades of poor farming techniques had destroyed the soil, and without rain, the land turned to dust. Huge dust storms, black, suffocating clouds rolled across Oklahoma, Texas, Kansas, and Colorado. People called it the Dust Bowl. Farms failed. Livestock died. Families packed everything into trucks and drove west, searching for work, food, or anything resembling hope. The Great Depression wasn't just a financial disaster, it was a human one.
By 1932, Americans were desperate for change, and that change arrived through Franklin Delano Roosevelt. FDR wasn't just elected, he was welcomed like a lifeline. His message was simple: the only thing we have to fear is fear itself. And he acted fast. Within his first 100 days, he launched the New Deal, a massive set of programs designed to rescue the economy, put people back to work, and reform the financial system. Banks were temporarily closed and inspected. The government created public works jobs. Farmers received support. Unemployment programs were introduced. Social Security was born. New financial regulations were created to prevent another crisis. FDR didn't end the Depression overnight, but he restored confidence, which was the first step toward recovery.
It began quietly. In early September 1929, the market began slipping. A few percentage points here, a few more there, nothing major, yet. But the mood shifted. Big investors started pulling out quietly. Rumors spread that stocks were overpriced. Then came October. On October 24th, now known as Black Thursday, panic selling erupted. Crowds gathered outside the New York Stock Exchange, watching as ticker tapes printed numbers that looked unreal. By the end of the day, bankers stepped in with a huge purchase to calm the markets. For a moment, it worked.
On October 29th, Black Tuesday, the dam broke open. Over 16 million shares were traded. Prices collapsed. Companies lost billions of dollars in market value. Ordinary Americans lost everything. People fainted on Wall Street. Rumors of suicide spread. Fortunes built over decades vanished in hours. The crash didn't just take down stock prices, it shattered confidence, and confidence is the oxygen of capitalism.
The New Deal reshaped American life in ways still felt today. Here's what it left behind: Social Security, guaranteeing income for retirees; FDIC insurance, protecting deposits; SEC regulations, monitoring the stock market; public infrastructure, from bridges to roads to national parks; worker protections; minimum wage laws; stronger banking rules. Before the Great Depression, the U.S. government played a small role in economic life. After it, the government became a major stabilizing force. This shift from laissez-faire capitalism to a mixed system formed the backbone of modern America. You can draw a straight line from the 1930s to the programs we rely on today.
A lot of people assume the New Deal ended the Depression, but the truth is more complex. The economy improved through the 1930s, but unemployment remained high. Confidence was fragile. And then, the world changed again. In 1941, the United States entered World War II. Suddenly, factories roared back to life. The government needed planes, tanks, ships, weapons, uniforms, millions of them. Men enlisted. Women entered the workforce in historic numbers.
Production surged. The economy exploded with new jobs, new industries, and new purpose. By the time the war ended, America had emerged as the world's strongest economy. In a strange twist of fate, global conflict accomplished what a decade of policies could not. It fully ended the Great Depression.
The Great Depression wasn't just a historical event. It was a national trauma. And like all traumas, it changed how people thought, felt, and behaved. Here are the biggest lessons America learned. 1. The financial system needs rules. Unregulated markets can grow unstable and collapse. 2. Banks must be trustworthy. If people fear losing deposits, the entire economy can collapse. 3. Inequality can destabilize society. The extreme wealth gap of the 1920s helped fuel the crash. 4. Government has a role in crisis management. When confidence disappears, only collective action can restore stability. 5. Ordinary people, not just investors, suffer the worst of financial disasters. The Great Depression reshaped everything from retirement savings to labor rights to how we think about the American dream itself. And although nearly a century has passed, its warnings still echo. When markets overheat, when debt rises, when confidence turns into blind optimism, history reminds us that nothing is guaranteed.
So, what does the Great Depression ultimately teach us? It teaches us that the economy is not just numbers or charts, it's people. People whose dreams can be lifted or shattered by forces far beyond their control. It teaches us that even the strongest systems can break, that prosperity can vanish, that confidence is fragile. But it also teaches us something else, something hopeful. America rebuilt itself. Families survived. Communities endured. And from that devastation emerged a stronger, more resilient nation. The Great Depression reshaped America, but it didn't defeat it. Instead, it pushed the country to rethink everything: its government, its industries, its values, and its future. And in that transformation, the foundation of modern America was born.
If you enjoyed this deep dive into one of the most important events in U.S. financial history, make sure to like this video, leave a comment telling us what historical moment you want covered next, and subscribe to Channel YouTube for more cinematic explorations into the stories that shaped our world. Thanks for watching, and remember, history isn't just the past, it's the key to understanding the future.